Citizens of the world, welcome back to another Keep Yours podcast where we try and keep a few more dollars in your wallet so you could spend them on the things you like to. Today, we are specifically covering the PPP forgiveness application 3508EZ. This is for loans between $50,000 and $2 million. And we're just going to get into it because there's no other way to do it. So preferably you can view this on YouTube. That'll help a little bit. But if you're looking for some general oversight on what you need to do, I've got 3 documents here that'll be in the notes. The actual 3508EZ form, the instructions for that form, and the frequently asked questions from the Treasury website. So we're going to start with the instructions because this determines whether or not you can use the 3508EZ. So first is 1, if the borrower is self-employed individual, independent contractor, or sole proprietor who had no employees at the time of the loan application and did not include any employee salaries in the computation of average monthly payroll in the application. Excuse me 1 second. However, my recommendation is you don't use the EZ form if that's you. If your loan is less than $50,000 and you're a self-employed individual, I would use the 3508S. I just did the podcast on that, so go look at that one separately and use that form. It's much easier. There's no limitations to any of it, so use that. Okay, so if that's you, you're already covered in the other form. You shouldn't even be using this one, but you can if you want to. All right. Requirement number 2, the borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period. And remember, your covered period is either an 8-week period or a 24-week period. And the borrower did not reduce the number of employees or the average paid hours of employees during the period. So if you maintained your exact same staff and you did not pay them less than 25% of what they were making prior, then you're eligible to use this form. Or if you can say number 3 is true, then you can use this form. And number 3 is the borrower did not reduce annual salary or wages of any employee by more than 25%. And the borrower was unable to operate during the covered period at the same level of business activity due to compliance with requirements established or guidance issued between March 1st and December 31st of 2020 by the Secretary of Health and Human Services, the Director of the CDC, or OSHA, related to maintenance of standards of sanitation, social distancing, or any other work or customer safety requirement relating to COVID-19. So this means that you may not have reduced wages, but you may not have been open. So the idea here is, hey, as soon as I was allowed to be open, I paid people exactly what they were paid before, then you're eligible again to use this form. So maybe the easier way to say this is who's not eligible to use this form. So who's not eligible? The people who are not eligible are people who laid people off and didn't bring them back, or reduced wages by 25% or more for people making more than $100,000 a year. If you did either of those 2 things, then you got to file the full form, because then you have all the complicated calculations over what's deductible and what's not, and all of that based off of wages. But if you can say those things, so here's the way that I'm looking at this. The whole idea of this program was that the government gave businesses money to pay employees and or pay rent. Now, some people will not have done that, but for the majority of people who use the money to pay the employees and pay the rent, this is the form for you. It's an EZ form. And again, if you could say one of these things, then you're good to go. Again, if you're self-employed, don't do this one. And if your loan was less than $50,000, don't do this one. File the 3508S instead. All right, so the rest of the instructions are basically line by line. And the first thing that we really want to talk about is the covered period, 24 weeks or 8 weeks. If you've kept all of your people and you're paying them the same, the easiest way to do this application is choose the 24-week period. That gives you effectively 6 months. 6 months of wages, 6 months of rent, 6 months of utilities. And since your loan was 2.5 months of salaries, you're going to have way more just in salaries than you are of the loan. Way more in salary expense than the loan, which means that you can just apply for your forgiveness based off of that number. That's going to significantly reduce your paperwork. So when I was filing returns last week, this is what I did is for anyone that could use the 24-week period because they agreed to these things, then, and they still had the same employees or they didn't reduce them during the period, even if it was the 8-week period. If you kept your employees for the 8 weeks, which is what they gave you the money for, and this happened to me as well. Like I had one entity that I'm an owner in where after the 8 weeks, we paid everybody using this money, and then we'd still lost some contracts, COVID related or not. Sometimes it's hard to tell, but regardless, you lose business, and when you lose business, you have to get rid of people if they're the ones doing the work. That's just part of doing business. Is if somebody else has the business, then hopefully they're hiring the same number of people. But you don't have control over that. What you do have control over is what your costs are. So when your income goes down, you have to reduce your costs. This is just a requirement. This is how business works. So if you paid people during the 8-week period, things will get a little bit tighter because now you're going to need the rent expense, the other expenses, because they gave you 2.5 months of salaries. You're getting 2 months worth of expenses. Now, here's the catch in that though. Suppose you had to use that 8-week period. You can use wages paid during the period, i.e., let's say you do payroll twice a month and you got your loan on April 25th. Well, the amount you're going to pay people on April 30th would be for the first 2 weeks of the month. So you get to include that. And then you also, so then if you're running an 8-week period, right, then your period's going to run out in June, potentially before you pay people that second payroll again, right? But you can also use the money accrued during the 56-day period. So let's just say you're 2 weeks behind on payroll in terms of when you pay it, then you really aren't on a 56-day window. You would get to add in those other potentially a week or two, depending on where it falls. But assuming you're 2 weeks behind, assuming you pay people 2 weeks late for work that was done 2 weeks ago, you're really not on a 56-day period, you're on a 70-day period. So that may help some people in getting to deductibility of their entire loan. And basically that's in the frequently asked questions section. And if you look at the frequently asked questions of what loan amounts you can do and how the costs work. So here's the question in the FAQ. This is what I'm referring to. Are payroll costs that were incurred during the period but paid after the period eligible for forgiveness? And the answer is yes. Also true is amounts accrued prior to the period but paid during the period also deductible, because that's right next. Payroll costs that were incurred before the period but paid during the period eligible for loan forgiveness. Yes. So you get the advantage of both of those things. And that's what I'm saying. If you're 2 weeks behind in paying, which is, I would say, normal business practice, then you're basically getting those extra 2 weeks anyway. So hopefully that allows you, in case your rent expense isn't super high, or maybe you're a business owner who owns the building and you're only allowed to deduct the interest expense of that payment, not the full rent payment. This could help you as well. So this gives everybody some flexibility where hopefully if you didn't lay people off within that 8-week period, you use the money to pay them. And by using the money to pay them, remember that money's fungible. And by fungible, that means that let's say you had $100,000 in your bank account and the government gave you a loan, PPP loan, that's going to be forgiven of another $100,000. And then you pay payroll. Well, you use the government's money to pay your payroll. You could say that, oh, well, I had the money that I was there to pay payroll, and I could have used the money from that I already had there. That was the purpose of it. You go, yeah, that's true too. But when it comes to filling out forms and deductibility, the money's fungible, and your payroll costs were used paying the money from the government. This is how you get it given back to you and a loan forgiveness. Okay, so we've covered that specific. And again, they're going to ask you the frequency of your payroll to determine the math on those dates. And that's basically why they're asking it for you in the form. So you're going to tell them what your covered period is, i.e. when you got your loan, plus either the 56 days or the 168 days. Now, if you received loans in excess of $2 million, combined with other affiliates, you got a different issue. You got to click that box. You can still use that for the specific loan, but they're going to roll those up. All right. Then they get into the calculations. So again, if you kept all your people, these calculations should be pretty simple. And you basically have payroll, mortgage interest, business rent, and utility payments. And as long as your payroll cost was used for 60% of those costs, you can get the whole thing forgiven. If you couldn't check one of the boxes above, and you've got this is why there's not a lot of complicated calculations here, because you had to agree to be able to use this form that you basically kept all your employees. And unless for some reason you weren't able to have payroll, so perhaps you checked the box to say my business was potentially closed, and therefore I couldn't use the money to pay payroll, even though you could have kept your people on payroll. But I'm trying to think of the situations where this form doesn't make sense and gets people in a little bit of trouble potentially with the calculations. But realistically, if this is for people who kept everyone on their payroll, and that's pretty much what the application instructions are telling us, is that to be eligible, you had to check one of those boxes. Okay, so then there's a couple of tweaky calculations in here. Specifically, if you're on the 8-week period, as I had to be on one of my loans. So those specifically come down to owner compensation. And I was trying to think through this owner compensation piece. And I think the reason that they limited the owner compensation piece is that if they didn't, you could have been an owner, gotten rid of a lot of employees, and still deducted the majority of your loan. And I think that's what they were trying to stay away from. So when you use an 8-week covered period, the maximum amount per employee you can deduct is $15,000. Now that's based off of the $100,000 limit and 2 months of salary. And then you get to add in any employer benefits as well. However, if you choose the 24-week period, that amount jumps to $46,000. Now realize that the maximum loan amount that you got for everybody was 2.5 times earnings. Now you get to deduct $46,000 and 2.5 times based on a $100,000 salary. So basically $20,833 is the maximum amount that you could have gotten for any employee, but you can get forgiveness of $46,000 per employee. This is exactly why I'm saying if you maintained all of your employees and you paid all this money in payroll and you used the 24-week period, all you have to give them is payroll data and you're done. And that means that the reports you're going to need to get are from whoever you used for your payroll. So even if you use QuickBooks, then QuickBooks now kicks out a report that lists the totals and the employees by name. That's different than it was before. And you just have to list owners separately. But that makes it pretty easy. So most of the applications I did last week were payroll data only, and then bank statements that support the payroll data. So they show that All right, ADP pulled out X amount of dollars on the 30th, and then also the IRS and other tax payments, they usually pull out 3 or 4 days later, and it shows those payments coming out of your bank statement. So all I had to upload for those entities was bank statements and payroll reports and put those amounts on this form, and we're basically done. So unless you've got some complicated situations, which you shouldn't if you're using this easy form, almost everyone with the complicated situations of I had to lay off a certain amount of employees and or I had to pay them less than 25%, you're not filing this form. So what else can be included? Business mortgage interest, rent or lease payments, business utility payments, also employer contributions to retirement plans, also employer contributions to health insurance plans. That's also deductible. So when you look at if you're paying wages, health insurance, retirement plan, rent, all of those things, even if you're using the 8-week period, if you kept the same number of employees, your whole loan should be forgivable. Okay. Now also realize, as business owners, the IRS implications of this are that this is basically effectively taxable income. Now, the loan in and of itself is not taxable income, but the expenses are not deductible per the IRS. So unless Congress changes that, we're stuck with that. And then all you need is your eligible expenses for payroll to be 60%. And again, that's potentially challengeable later, but for now, that's what's included in the form. Now, what I found doing multiple entities last week was that the portals set up by the banks, or probably more correctly set up by third parties hired by the banks, have all this form information for you. So they're asking the questions, they're asking for the input of the amounts, and then they're asking for the documentation to support that. And again, you can make this form very, very simple if you're using the 24-week period. If you've kept all your employees just by running payroll reports, you have a $40,000 per person deductibility. Meanwhile, the amount that you got was half of that or less for each employee. So effectively, they're trying to say everyone who's still got their employees rocking and rolling, you're good to go. Now, there are some questions that come up of what about if what if I had employees and they didn't come back to work? Or what if I had employees that they couldn't come to work because they were worried about COVID, or they didn't come to work, or I tried to hire them back and they wouldn't come back? These are valid questions, and unfortunately, there's some bad info on here of it saying that, and I'm trying to make sure I have the right info here. All right. Will a borrower be subject to reduction to its forgiveness amount due to a reduction in full-time employees during the covered period if the borrower offered to rehire one or more of laid-off employees but the employees declined? So it says, in calculating the loan forgiveness, a borrower may exclude any reduction in full-time employees if the borrower is able to document in good faith the following. 1, an inability to rehire individuals who were employees of the borrower on February 15th, 2020. And 2, an inability to hire similarly qualified individuals for unfilled positions on or before December 31st, 2020. So if this is your situation, you're probably going to file the full form. And you're going to have to document that A, somebody would not come back to work, and B, you tried to hire somebody and couldn't hire them by the end of the year. And if you're still in that circumstance, then you may be waiting to file your application because you may still need to try and hire somebody and put them in. Now, here's the really bad part about this that I hate. Is borrowers are required to inform the applicable state unemployment office of any employee's rejected rehire offer within 30 days of their rejection of that offer. I always hate this stuff. You're basically saying, this is an employee that worked for me. They could have worked for you for a decade or more, or 2 decades or 3 decades. And because of COVID, maybe they were scared. Maybe they were taking care of an elderly parent and they didn't want to come to work, especially if that work was customer facing and they're potentially being exposed to the virus and they didn't want to bring that home. Then you have to go tell the unemployment office that you tried to hire them back. That just pits employee against employer, and I don't like that. I never do. And the government telling you kind of have to if you want this benefit, is what it is. Anyway, if that's your circumstance, it gets very iffy of whether or not you can file this EZ form. Because remember, to file the EZ form, you're making the certification up front that you did not reduce the number of employees. Now, that's basically the requirement. You did not reduce the number of employees, and you did not reduce how much you pay them. That's the typical, right? Or you're saying, alternatively, you didn't reduce the wages of employees, but you were unable to operate during the covered period at the same level of business activity. So this is kind of the form for potentially people who, let's say, ran a restaurant, and you can't run the same level of business activity if they say you can't have indoor dining. But at the same time, you didn't reduce any wages of your employees. You were just unable to operate with them because of safety requirements. So that's of no fault of your own. So therefore, you're still eligible to file this EZ form, and you don't have to say that, hey, I've got fewer employees. Well, if you have fewer employees because it was basically mandated, no one's expecting you to have, the bus boy, the waitress or waiter, or the staff, the entire staff for an indoor restaurant if all you're doing is takeout, because that's all that you're allowed to do. And so this is kind of the exemption for you if they shut you down. I know other people who run yoga studios and gyms who were shut down. And therefore, if you brought back people as soon as you could for the positions available, I think this is exempting you. And I think that's their intent in here, is to exempt anyone whose business was specifically said they couldn't operate. However, if your business was not one they said specifically you could not operate, and you just had a reduction in business, for example, a hotel, right? If you run a hotel, well, the hotel is allowed to be open, but you probably laid off a lot of your staff because your volume of business went down. Or let's say you run a tour company, or an Airbnb in Hawaii, where now there's nobody coming to visit, so business isn't required to be shut down. You could rent the apartment to locals or anyone who went through the 2-week quarantine period, but effectively, or office space that maybe it wasn't required to be closed, but maybe, you had to lay people off because your business went down. Those are the people that have the next problem that are going to have to file the full form, 3508. But this form is available for a lot of people who can meet these criteria and maintain their staff, or maintain as much staff as possible based on the rules. And I think that's part of kind of what's lost in here, and what they have not explained in great detail of who files when, how, where, and why, is they don't get into into great detail on these. But this is what it says. So if you can check that box and say, hey, I didn't reduce any salary or wages, right? And because I was unable to operate, I did reduce the number of employees, but that's because I had to. And if you didn't have to, and this is where it's going to get really dicey, what businesses they're going to say, were allowed to stay open and what weren't. So whether or not you can check that box determines whether or not you file this form. And again, you could check that box and then come back and challenge it, and they have 6 years to do so. So just know that as well. All right, so that's it for the EZ form. Hopefully this helps, and hopefully everyone understands the records that you're going to need. Now, let's say you chose the 8-week period. I guess I should finish up some of the other things that I ran into. So let's say you chose the 8-week period, as I did on a couple of returns, and you're limited then to 8 weeks of payroll, but you've got rent costs. Okay, well, what documentation do I need to support my rent costs? I'm going to need my lease and copies of checks or bank statements for withdrawals that went to pay rent. Pretty standard stuff. What about utilities? Again, copies of bills. What about retirement benefits? Again, copies of payments made. So whether that's the payment made to the insurance company or that's the payment made to the 401k company to go along with the payroll reports that show those amounts, that's the documentation that people are going to need. And the banks have to verify that information before they go back to the SBA and tell them whether or not they believe this loan should be forgiven. And then the SBA is supposed to give the bank money. And all of those things take some time. But there's good reasons to get this done. So if the EZ form is for you, hopefully this helped you with filling it out. Thanks for listening, and we'll catch you next time. And we're going to talk about how to do the full form next. All right. Thanks.